Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, May 31st, 2018. As we head into the final hours of the final trading session of the month, I figured I'd do a quick update. We'll focus on QQQ and just some of the top holdings. I'll keep this video very brief. I think I can do it under 10 minutes. We'll see. This is the QQQ 60-minute chart. Chart I posted a lot recently. I'm always going to update this chart. It's one of the indexes I follow, and story is this: you look for these divergent highs or divergent lows for that matter if you want to go long, get bullish, and more often than not they're followed by corrections. So it's nothing's 100% in trading. This divergent high here, I made mention in the trading room earlier today. From this point to this point right here, I had a question mark, as you can see at the time, because we hadn't yet taken out that previous high right there from May 14th. Now we did with today's high. So you zoom in real quick, you can see right there, see on today's candle. So that does give us a divergent high. Here's the price channel that the Qs have been in. And so now there's clear negative divergence, much more powerful. This was a small divergent high here. We had a minor divergence on the PPO with that rising wedge, and it played out for a little bit of a pullback. But this is now much more significant. So let's just put that line there. And now sit back and see if it plays out like I expect it will. Before I get into the top components of QQQ, one of QQQ is tech heavy. It's over 50% tech stocks. Of the tech stocks, semis lead tech. They're the big, sort of the canary in the coal mine for tech. And here's the SOXX 60-minute chart. I posted this in the trading room just a few minutes earlier, about 15, 20 minutes ago, and wanted to point out that we also have a bearish rising wedge with negative divergence, as you can see here on the 60-minute chart, clean up trend line. So right now it's an unofficial trade idea. I may make it official. I know some of you guys are in the trading room short Micron and some others. I put Intel out there today. That's an active trade now. This video, by the way, I'm going to do members only. And if you're watching this video on YouTube and it is not May 31st, 2018, I get this a lot. What I do on the YouTube channel, the videos are private for members, certain, restricted content. And then after a while, I release that when it's no longer time sensitive, just to, mainly so you can get an idea of what we do on the site, what some of the member only content is about. So therefore, if you're watching this after May 31st, sometime, a month or two after, just keep in mind it's no longer actionable at this time or at that time. Anyways, there it is. So price target here, minimum target. I think we're coming down to about the 178.57 level, 58-ish level, something like this. A little move down here. This is what we need to see happen. We need to break that trend line. That will give us a sell signal. Little reaction there, and there's certainly the potential for more when I go out to the daily charts, but I don't want to do that right now. I want to stick with just the short-term outlook here. Again, going back to QQQ, and we'll look at about a dozen, maybe top 10 or so holdings. Not even that, less than 10, just a half dozen or so. Here's Apple. Apple's the largest component of both the Nasdaq 100 as well as the S&P 500, and it has a very well-defined trend line. So we need to see this break. If that trend line breaks, you do have support here at about 183.90. That's this previous reaction high here. You had a divergent high, which so far hasn't really played out for a whole lot, but more and similar to the Qs. We had that little minor divergent high there. We've had sideways trading action, but either way, watch that level, and then if we break that level, and I think we will, that's my guess, and if we do, I'd see a pretty quick move down here to about 179.90, little reaction there, and then we'll just have to see how the charts look from there to determine where we go from there. All right, that's Apple, Amazon, and there's a common theme also in this video. A lot of these stocks are either wedging up, they're at support. In many cases, they have divergent highs. So you have this little rising wedge on the Amazon 60-minute chart, and then you have this trend line right here. I didn't really mark targets, but I think if we do correct in the Qs, minimum target here on Amazon would be about that 1530 level. That's right, about 1530. Backfill that gap. Microsoft next up, and I'm just going through these components in order of market capitalization. Microsoft, you have this wedge here, and there's a lot of cuts below it. So you could take that trend line and do this. At this point, you might want to. That's what I call the BOD, or benefit of the doubt trend line. This trend line has more reactions, but we've sliced through it a lot. So watch this trend line now. There's enough reactions there to validate it, and that gives us a benefit of the doubt. So if that trend line breaks, that also takes out. That's really a large bearish rising wedge here that we're looking at between these lines and this line, with negative divergence there on the 60-minute chart. Alphabet, not a lot here. This is GOOGL, the Class A shares, but you can see there's a little gap right here. We had a little divergent high right there with a rising wedge. We broke down, corrected. We pushed back to that level, so we backfilled that gap, and that's also resistance. That's why the line is there. There's some reactions here. You can see to the left as well as that gap right there. So that's what's capped the advance so far. There's the other share class, GOG. Here's Facebook, rising wedge with a divergent high. Only on the PPO we had divergence. You can see that the RSI made a higher high. However, that divergence on the PPO has extended. So with this additional thrust up, we put in a marginal new high, which is still a divergent high. It's still a continuation of the divergence that started back here at this point. I don't know if the cursor shows well. This is where the divergence started. We had divergent high number one here. Breakdown of this trend line, little marginal new high, but again, it's kept this divergence intact right here. And now we also have divergence on the RSI. So that's all the better, increases the odds of a, significant pullback in Facebook as well. And again, I'm doing this because QQQ is a sum of its parts, and the top 10 holdings in QQQ make up the majority of the returns there because of the weightings. Here's Intel, bearish rising wedge. Triggered the entry by a hair. I think we went down. Yeah, the low was at 55.06. I had an entry on a break of below 55.10, so it is an active short. We are below the trend line right now, so let's see what happens. A little kickback rally, it sort of went through there and just reversed right after. But again, from the look of this, the divergence here, you can see just as we had back here, there's nothing 100% in trading, but there it was, divergent high, back test. Sometimes you get a little kickback rally. We back tested the trend line twice. Rising wedge, divergent high, breakdown, correction, and I see no reason why this one would be any different. But again, I would like to see a big red impulsive candle and a 60-minute close below that trend line to help firm that up. But either way, it's an active trade as of now. Cisco looks better than any of the top components out there. I do think it comes down a little more. You can see the lines I have drawn, potential positive divergence. There's a little bit of support here. It's not a solid support level, but it's decent around 42.25. But if the Q is correct, as I suspect, it's going to come down a little more, and it may even go below that level. So you can see the divergence lines I have drawn here. Now those may be extended. If it drops below that 42.25 level, we'll still have divergence for a while unless it takes out these previous lows. But again, Cisco's one of many, and I wouldn't try to swim against the tide. If the Qs start to correct, I wouldn't step in just yet. And I just wanted to point out that Cisco probably looks at, let's say, the least bearish of the stocks out there. Here's Netflix, one of the top holdings as well. Nice big bearish rising wedge on the 60-minute chart. Well-defined uptrend line. We're at the top of the wedge now. So there's two ways to trade this one. You can wait until the conventional entry is a break of the uptrend line, but a lot of times if a wedge looks ripe and ready to break down, you can short at the top of the wedge, stop somewhat above. Target, I have to move these lines around, and I'd have to give you some additional targets, but I think right there is an initial target zone. Either these lines here, somewhere in between, probably this lower one there around 307 or so. And let's just wrap it up here with NVIDIA and VDA. We had a divergent high right here on the 60-minute chart, and that's certainly played out for correction. Nice pullback so far, about almost 8%. Little kickback rally, backfilling this gap. So let's put one more line here. You can see a little gap right there. We backfilled that gap today, and the semis, like I just showed you on SOXX, are ready to crack. If that wedge breaks on SOXX, it will most likely drag most of the semis down with it, including NVIDIA. And although we were focusing on the daily charts, on the 60-minute charts, I'll just jump out and we'll wrap up here with the daily chart of NVIDIA. There it is. There's the trend line that really needs to get taken out. And you can see this divergent high. These divergences continue to build here on the daily chart. And there's a lot of hot air under this stock. But again, we need to see a little bit more work to firm up the bearish case, especially breakdown in SOXX. And of course, going back to QQQ, we need to see that this trend line here go. But as of now, it looks pretty good. We've reversed off that divergent high, so let's see what happens. I'll post an update tomorrow on this. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.